Hello everyone, welcome back. In the last session, we discussed about account dimension property, that is your exception aggregation. Today, we'll be discussing on the topic currency conversion. So in SAP Analytic Cloud, currency conversion is used to convert transaction data from one currency to another currency dynamically during reporting, planning, or data entry. So within the currency conversion, we'll talk about different types of currencies. One is your local currency. Local currency is a functional or operational currency of a company. For example, if I am if I'm entering, so for example, I have Indian subsidiary and I try to enter the values in INR. So in India, I'll try to enter all the values into my system in INR. Then after that, the user from USA, he will enter the values in USD. Then your German, say for Germany, they'll try to enter the values in euro. Okay. So they'll try to enter the transactions in their local currency. Now, when I want to combine all these values, because if you want to do a consolidated report, then I need to translate all the values, right? So first what I'll try to do is I'll try to collect the data from your Indian subsidiary, then after that US subsidiary and Germany subsidiary, and the headquarters, for example, it is in US, and we want to maintain all the converted values in USD. So this currency, reporting currency, is known as your group currency. This is your local currency. So local currency is your operating currency of the company. Then group currency, the consolidated corporate level currency. Then translation, used interchangeably with conversion. Then your transaction currency is a currency entered in your planning. And reporting currency is a currency selected in your story, right? So this is the normal currencies types which we'll be using normally. So these are the normal currencies which we'll be using, right? So this is, for example, in the Indian subsidiary, you have got the values in INR, and US subsidiary in USD, and Germany subsidiary in your EUR, right? The same way. So finally, we try to consolidate all your currencies into USD here, right? And report in a single currency, that is your USD. Right. Now coming back. And coming to the architecture. So in currency conversion, we use currency conversion rates for converting from one currency to another currency. So converted amount is equal to or your target amount is equal to source amount into exchange rate. So these particular exchange rates are maintained in your rate table. It is maintained in your rate table here. And these exchange rates are normally provided by your financial institutions, or from S4HANA also, we can load the data and populate it. So we'll maintain this rate table from the scratch. Okay. And coming to your planning model. So the actual data will be loaded from your ERP system. Then after that, loaded into your planning model. Then all the local currencies will try to load this into your planning model. Then after that, we'll try to translate them into your group currency there. Okay. Then after that, we'll try to build one SAC story for input forms and see how this currency translation happens, right? Okay, then let's go for a demo. So in the previous session, we used S0 underscore account model. The same model, we'll use it. And we are talking about your account dimension, right? Let's go to your account dimension. And within the account dimension, here you can see that there is an account type. Okay. Account type is already we have entered the values. Then aggregation type, exception aggregation we discussed, decimal places is done. Unit type, so for currency conversion at the account level, we need to set your currencies. Okay. This was done last session only. So now, so what you need to watch out is here the rate type field is not available. Okay. So in order to start with your currency conversion, the first step what we have to do is we have to enable the currency conversion. Let's go to model settings. Within the model settings, go to conversion. Within the conversion, just click on your currency conversion. So here for currency conversion settings, we require one exchange rate table. This is created by activating the standard business content for IFRS. Okay. So in order to create a new currency rate table, let's open a new window. And so you can see in the currency conversion tables, we are able to see this default one. Now from here, let's go to conversions, then click on currency conversion table. So in order to reach this, go to modeler. Within the modeler, you need to go to the third tab, that is the conversions. Within the conversions, let us click on currency conversion table. So the name of the table, I'll give this as currency underscore conversion table or exchange rates table or rate type table. So anything we try to give it. Once it is given, let's click on create. For the time being, I'm not maintaining any values within the conversion table. Okay, let's save it. Then go back to the model. Now in the rates table, no, it's not still available. So let's go back. Go to your currency conversion table. And for the date dimension, so if you have multiple date dimensions, like your posting date, document creation date, so like this, if you have any date, so whichever you want to use it as a transaction date, that you can select from here. So I'm taking the default date here. If you want to create a variable, we can create a variable, but we'll do it this little later. Coming to structured priority. So there may be some fields which will be conflicting with your account and measures for like rate type field within your measures as well as your accounts. So we'll try to set the default properties to measures, then click on OK. Once done, then for the date, we're trying to take the year from 2025 to 2027. Okay. Then version, we have only actual version here. Fine. For currency translation, we require a currency dimension or a currency dimension with property as currency. Either of the thing is okay. Fine. So what we'll do is organization dimension has a default property of currency. We'll use that one. Okay. So let's go for, let's create a dimension called entity. Select this as organization and click on add. And within this, let's maintain some values. like India, then INR, then USA, we'll give it as USD, and Germany, I'll give it as UR. Okay, on these three values, I'll try to paste in the text and save it. So by default, your organization dimension will have the currency field as a default property. Okay. Once your entity dimension is created, now if you come back to your account model and see that there is a rate type field is generated when we enable the exchange rate. So when we enable exchange rate, automatically rate type property is being generated automatically. And the values are also populated automatically. So the funda here is for your P&L accounts, the rate type will be maintained as average. And for your balance sheet accounts, your rate type will be closing. That is the thumb rule, what we have to understand. So remember that. For P&L accounts, that is your income and expense, we have to use the rate type as average. And for this also, average. Okay. So this is your rate type. And for balance sheet accounts, that is your asset and liabilities and equity. So we have to use month end closing rate. All right. So for example, your cash account will be carried forwarded to the next month, right? So inventory also. So whatever the stock is left at the end of the month will be your opening stock within your next month, right? So for balance sheet accounts, we have to use the rate type as closing. And for P&L accounts, we have to use here this as average, right? Fine. So now let's go for creating a template for inputting some values and do the conversions and do the translations. Let's go to story and click on the canvas. Take the table widget. Then within this, we'll select here as your accounts, profit and loss accounts and balance sheet. So we'll concentrate first on your profit and loss. Later, we'll try to add up your balance sheet. Okay. Select only profit and loss accounts. Next, go to your measures. Within the measures, we'll take up your value. Then after that, we need to go to your filter. And within the filter, we'll take entity. We'll take the source currency as USD. So the country, I'll try to select it as USA. And in order to have the dates, let's go for entering the dates. I'll try to keep the filter for Jan only, right? For Jan month, we'll try to keep it. So let me add the date. Go to settings, all time intervals. So I'll try to take the date for Jan 2025. Then after that, Jan 2026 and Jan 2027. Click on OK. Then within the columns, we'll try to add your dates here. And after that, the version, which version it is. So we'll enable date as well as version. Then after that, in order to input your values, let's go to measures, more, show unbooked data. Then go to your, say, dimension accounts. And this also make it a show unbooked data. Select account header, drill down, make it to level 5. I want to display all the values. Done. Now drag this to the right. Let's go to styling. Within the styling, just scroll down and come to cell. And now this, it is your account. So this is your account dimension. Click on wrap text. And for your measures, click on wrap it. And you need to click on the table. And in order to display the currencies by the side of your values, so we need to come to your table properties. Within this, we'll have display unit or currencies as rows, columns, or cells. Okay. So we'll try to make this as cells. Fine. Done. Now, let's go to the sales revenue and double click on this and see that we are able to input the data. So I'm trying to input the data as $1. So here $1 is being displayed by the side of your cell. Okay. Next, coming to your expense, I'm trying to enter the actual value for 2025. So these are the actual values for 2025. So the local currency we have maintained for January 2025 in US dollars. Now, if you want to have the translated currency from USD to INR, okay, then for that, what you need to do with the translation is, let's go to your model now. Let's go to your model. Select the model. And in order to have a translated field into INR, so we need to go to calculations. Within the calculations, click on add currency conversion measure. Then give this as value underscore INR in Indian rupees. Okay. Now for this, the source measure will be the value. There is a measure. Then after that, target currency, I want to fix it to INR. Done. Then I'll keep the category as dynamic and formatting. I'll try to keep the decimal places to 2. Save it. If you want to see the preview, you can see the preview of the data from here also. So add your missing rates. We don't have the missing rates, so it is not able to show the value. So then let's go for your new story here. This is your local currency field. And I want to show you the translated currency field that is in INR. Okay, now let me go to the builder. So the actual dates, I'll try to remove it, not required for this. I'll remove for 2026 for the time being. Keep it for 2025. Now key figure, I want to add, when you go to the key figure, that is your values, go to the, sorry. So in the key figure, I want to add value underscore INR. So go to your add measure. So it is not displaying here. All right. So value underscore INR is still not appearing here. So for that, what we need to do is we need to refresh the whole page, right? Just refreshing the just refreshing your particular page will not help out. Fine. So what we'll do is before refreshing, we need to save this template. So I'll go to E2 Tech. Within this, I'll just give it as currency translation input template. Just save it. Then refresh the whole story. Then within the measures, click on add measure and we'll be able to see the value underscore INR. So select it. So here we get an error telling that the currency conversion fee, right? The rate for converting your USD to INR is missing. So in the model also, so we are facing this add missing rates, right? So from here, if you click on show more, add missing values. Now, if you want to publish the values, then it's publish and you can leave the page. Then you have unsaved values. You want to change this? Yes. So it will take you to your currency. Okay. Now, what we'll do is we'll try to maintain some currency value here. So, for example, the source currency is USD, target currency is INR, and this value is valid from 2025 Jan 01 Jan 2025. This is a validity start period, and exchange rate, I'm trying to keep this as 90 in 2025. So this is a generic exchange rate, which will be applied to all the categories and all the rate versions. Fine. Now click on save. This is first scenario where we are trying to maintain a generic rate for USD to INR. Now go back and you can manually refresh. Then we are able to see the value here. The same way, come to our story. Now we're able to see that this is your actual data. This is the local value for Jan 2025, and this is your value in INR. Right? So here sales revenue, 1 USD is equal to 90 INR. So that particular currency is being translated successfully. So these are the steps which are required for converting from one currency to another currency. So what we have done, just we'll try to revise back. Within your account model, whenever you want to do the currency conversion, first you need to ensure that your currency conversion table, I take one more screen. So you need to maintain all your exchange rates within your rate table. So you need to go to modeler, go to conversions, and we have your currency conversion table. So create one currency conversion table and maintain exchange rates from source to target currencies. Fine. Once this is done, then step 2, go to your model settings. There within the conversion, enable currency conversion, provide your rate table, assign date dimension. Okay. Then go to structure priority, whether you want to prioritize the properties of measures or your accounts for rate type should be specified here. For the time being, we are taking this as measures. Now click on OK. Once done, we need to go to your account dimension, and from here, go to your properties and see that the rate table is being generated. So we have both P&L and balance sheet accounts. So we can see that your P&L accounts, that is your revenue and expenses, will be automatically created as average types. And for balance sheet, it will be your closing rate type. Fine. Next. So this will be done automatically. The third step is we need to create your entity for currency, right? So for dynamic currency to be maintained for for each country. So what you can do is you can go to your entity. So within the entity, just go to your entity table. We'll create one entity dimension of type organization. Within this, there is a default currency property or field, and we have maintained 3 uh, entities in this, and after that, their corresponding currencies. Okay. So in the report, we have filtered to USA. So the currency automatically will be displayed in US dollars. So go back. Now, if you see the data also now, so within the data foundation, so we have entered for revenue, which will be in a negative value, right? And this is, you can see that the entity is USA, and for 200, it is in USA. So if it is in USA, then automatically the values in your report, right, will be in US dollars. So by default, they are displaying in US dollars here. Now, this particular local currency, we want to translate it to your Indian rupees. Then what we have to do is we require one more column for this to be generated. So for that, what we need to do is we need to go to your calculations. Within the calculations, just go for conversion measures and click on add currency conversion measure. Then after that, select this and try to make this category as dynamic initially. Then after that, go to your booking. That is your booking date. Okay. Then after that, you can create a story. Where is this? This is your story. And within the story, whenever you loaded your actual data in the local currency, then add up your translation field that is in INR. So once you try to do this, then you'll be able to see your converted values within the report. Fine. This is your direct exchange rate. And if you want to see the indirect exchange rate, how it has been created. So no need to create a translation rate from INR to USD. For example, from INR, if your local currency is INR and you want to convert this into USD, so instead of making an entry, system will automatically use a indirect exchange rate. So I'll show one typical example how this indirect exchange rate is being used. So there is only one exchange rate, right, from USD to INR. And I'll try to convert the source currency to uh, INR, and we'll try to convert into USD. So go to your report. So within the report, I'll try to revert the values already saved. Then I need to go back to my data, remove all the data from here. Otherwise, so in my report, I will go to the builder, and in the filter, in the filter entity, change it to India. So currently there is no data here, right? And then let's go for the sales revenue. I'll try to put here as 1 and enter. Now it shows as 1 INR. Okay. And now 1 INR is equal to 0.01 USD. Is it fine? So this is your indirect exchange rate. So we are not maintained any exchange rate from INR to USD, but automatically it calculates, system calculates and give this indirect exchange rate to you. Okay. So this is in only 2 decimal places. If you make to 7 decimal places, then you'll get the actual number within that. Okay. Once done, I'll try to revert the values. I don't want to store in the Indian rupees. So just to demonstrate your indirect currencies, I've shown you some examples. Okay, now coming to back to this, and we'll try to go to the builder and my entity, I'll make it as USD. So next example is we'll try to maintain some planning values and budget values and try to apply some currency translations within that particular fields also. So go to version management. Within the version management, show versions in use only. Okay. And within this public version, we have actual. Then click on blank public version. Directly we'll go for public version, no, not for your private version. So my public version is planning. Category is planning. Just click on create. Display it. Then after that, let's create one more version. That is your budget. And the category, we'll make this as budget. Click on create. That means we can maintain now 3 sets of data. One is your actual, plan, and another is your budget. Okay. Now we can close this, stretch it a little longer. Fine. Now, this is your actual data, your value. This is your actual data. But based on your actual data, we'll plan the values for 2026, right? For 2026, we'll try to plan the values. Now, we want 2026 year in this. We'll go to date. Now we'll take 2026, but I'll take only 1 month, right? For Jan. Then after that 2027, I want to display Jan here. So this is your Jan, actual values for Jan, and this is for Jan 2026 budget and planning. So budget value also for actual, I'll try to make it as for 2026 based on this values, actual values. I'm giving a budget of $1 for, sorry, $1 for sales. Okay, you can take a different value, but I'm trying to take this as the same thing here. So budget for sales, I'm giving it as $1, and for your sales expenses, say for example, this is also $1. Then coming to your planning for 2026, here also let us take it as 1 only. Putting in this, put this as 1. Then for expense also, I'll put local currency value for budget and plan as $1. So we want to test with actually with the exchange rates. So I'm making this as simple, right? Simple modes. Done. I'll try to enter some actual values and budget values for 2027 also. Okay. Say for budget version, let me take the sales revenue as 1 and expenses as 1 and planning as 1 and it is 1. We think that we have loaded the data for actuals for Jan 2025. Then after that, planning data and budget data for 2026 and planning and budget data for 2027. So these values should be converted to your translated to multiple currencies there. Okay. Now, what is happening? For 2026, we can see that these values are translating to 1990. So they are using a global or generic exchange rate. That is your 90 there. Okay. This is your local currency for actual budget and planning. And this is your translated value for value in INR for January 2025 one. This is a translated currency value in INR for budget and planning. And for 2027, budget and planning, this is a translated. All the values are using only the global translation rate, that is from USD to INR, but it is not able to recognize planning a separate exchange rate, budget exchange rate, and exchange rate. But we are not specified within your currency conversion table that whether it is an actual, planning, or budget. So this rate will be used for analytical applications because there we use only actual. From actual, we use directly the exchange rates and convert from one currency to another currency. But when it comes to planning, right? So we'll be having actual data, planning data, forecast data, budget data, right? So these particular datas will have their corresponding exchange rates separately. As these exchange rates are not maintained yet, so it is trying to show the data as single currency, that is your generic currency as 90. What we'll do is we'll try to create a separate field because we want to convert the data for budget separately and planning separately. So what I will do is let's go to your planning model and within this go to calculation. This we'll think that this is value in INR, right? So value in INR. So that we'll try to make this as value is fine. And the category, we'll try to take this as actual, right? We're trying to categorize this as actuals and save it. So previously I given it as dynamic. Dynamic means it will automatically see what type of version it is. If it is an actual, it'll apply to actual. And if it is, say for example, so if it is planning, then dynamic will apply the global rate to planning as well as budget. But now we are specifically telling that this particular rate should be applied to actuals only. So this particular measured value underscore INR requires your exchange rate which belongs to actual category. Fine. So, but we don't have this currency rate for actual category, then it'll throw an error. So I want to keep the global rate at 90, but the actual rate to 100. Okay, I want to use a different exchange rate for that. So what we need to do is go to this conversion table, paste it, and make this to 100. And category, set it as actuals. Now save it. In the same way, I'll try to change this one to planning and this to budget. So budget is 120 and planning is 115. So I'll have some bigger values instead of going for decimal places and doing multiplication divisions. Just have a simple uh, calculation, simple values here, right? So we'll think that the actual rate is 100. Then after that, 115 and 120. Done. Now let's go to your currency and refresh. First, do the refresh the page and see that any exchange rates are applied. Now, if you refresh the page, we'll see that the actuals for 2025, right? Actual. So after refreshing, we'll see that the local currency is being converted to your actual. And now instead of 90, it is showing here as 100 here. So in order to maintain the conversion for actual, planning and budget, then what we need to do is we need to create two more fields for this. So this value INR, I'll make it as actual INR, actuals INR. Then after that, we can copy this or click on create a new one. And this is plan underscore INR, planning underscore INR. And for planning, I'll try to set this category to planning and booking date is fine. Now, if you want, you can copy this and make this to budget. Okay. And make this as budget underscore INR. This is the base values, right? And this is pointing to budget. Now save it. Is it fine? Now, when we go to your planning table, so representation of the data of this will be a little more lengthy. Then later we'll try to use restrict measures so that the structure will be simple. Okay. Right. So we need to add some more measures in this. So in order to add the measures, we need to refresh, right? If we go to add measure, we'll not see the extra added calculated fields. So for that, we need to click on refresh. This is your value. And let's go for your measures. So now we don't have this value underscore INR. It is actuals underscore INR. So we can remove this. Then after that, go to measures and add measure that we got value, actuals, planning, and budget. Right now, if we see this data, now we got a very big values, right? Still. Now we'll see for planning, that is your budget underscore INR. It should use planning underscore INR is So for actuals underscore INR, it is applying 100 to this one is correct for us, right? Now for budget, then it'll apply for this values also the same currency rate there. And when I come to planning, right, this is showing as the planning 2026. We should have the converted values, but it is showing as local, right? Converted value. Okay, we have to fix not this one. We need to show this as fixed value should be USD. Converted value should be INR. And this one also should be to INR. The translated value should be INR. Now save it and refresh the whole page. It's lost. But expand it. Now if you see, we got for actuals, it has applied your budget values and this one, right? So it has applied the actuals to this particular currency here. Actuals is being applied to all the three fields here. In the same way, if you see the budget, for the budget one, we thought that the budget value will be for, uh, this is for budget. Budget we given as 120 and planning is 115, right? So planning INR, for planning, it will show 115 here. Okay. Cool. So instead of applying this, for example, for planning, we used planning only, it is showing correctly. But if you want that actuals value of actual value, you have to be applied for this. Then go back to your budget, for example, planning. So within the plan, instead of category, you try to specify this as dynamic. Now save it and refresh. Before refreshing, so we'll save again. Refresh. Now refresh it. Scroll to the right. So you're planning. So planning now, it is showing here as 100 and budget as 120 and planning is 115 here. So dynamic will automatically assign you the correct things for you there. Okay. So actual means it will apply that actual to, if it is you're applying planning to this particular measure, then it'll apply planning rate to all the combinations there. Okay. So when you're trying to make a matrix, then at the time here for the planning figure, we got your version, right? Then it'll apply to all these three versions. And if you keep this as dynamic, then actual rate is 100 and planning rate for this for 2026 is this, and for 2027. If you want to maintain for 2 years, then we need to maintain here, right? Copy these values and make this as this is for 2026. We'll maintain this for 2026. because it is applying from 25 to all the 3 years. But specifically for 1 year, if you want to give it, then give it as 2026, then 2026. Three values is fine. Now this is for 2027, and this is for 2027. Then make this as 2027. Now save it. But for 2027, we'll make some changes from here and there. So it is 101, and this is 121, and this is 150, 116, 16 will make it. 1 value, we have increased it. But we require for 2025, we require 2025 actually is there with us, right? Then it will take 90 for that. So let's see. Refresh. So we have changed that one. So here what happened for actual INR, it has taken 90 here, because from 2026 only we have maintained the values for actual there, right? So this we are taking this as this one, and for this it is we're not given this as dynamic, right? For planning we're given this as dynamic. So planning values, it is 90, 2026. Now it is what? The actual we have it is what? 90 is your actual. Then after that, your planning value is 115 for 2026. And this is for 2027, 15, 16 here, right? And this is budget is 120, and here budget is 121 here. So planning values will be perfect for you when you make this as dynamic. And if you see the budget values, so budget values, we already used it, all right? So 25, 26, and 27. So 27 budget is correctly entered. Budget values for 25. 25 is what? 20, 21. So instead of displaying this many values, what I will do is I'll try to limit the number of key figures, right? So let me remove all these values. Let me go to add calculation and go for a restricted measure. So the restricted measure, we'll call this as actuals for, we want actuals for 25. Okay, actuals 25. Value, the date should be put to select member. Then let's take this to Jan 2025. And the dimension should be the version, right? We want the version to be actuals. So the dimension should be actuals. Then click on OK. So it is trying to show me the actual for 2025. So in this, we want to maintain the actual value first. So go for add calculation, restricted measure. Actual underscore USD for 25. And this will be your value, and date is for 2025 and January. And dimension will be the version, and select it as actual. And this is not required, only two, and click on OK. That is your actuals underscore USD 25 is this. Now let me go to add measure, and I'll go for add calculation, restricted measure, and in this I'll go for actuals underscore INR 25. So for that I'll go for actuals INR field, then in which it is selected as actuals. Now the date, we'll take this one as 25 Jan. Okay. And this is INR 25 is okay. Dimension is not given. Version is actual. So this is the actual value, and this is your converted value. Okay. Now let's go for add one more measure. Go to add calculation. Go for restricted measure. And this name, I'll give this as plan underscore 26. All right, plan underscore 26. This will think that all in INR only. Okay. Converted measures. So plan 26. Then we'll take this as planning measure, and the date, I'll be selecting this as 26. And dimension should be your plan. Click on OK. Now we'll see the plan 26 value with 115 here. All right. Then after that, we'll go for another one, add measure. Go for add calculated value. This is budget underscore 26. We need to take this as budget, and the date for this is, we have to take this as 26. Dimension, we'll select this as budget. Is 120. Then after that, again, add measure. This is plan underscore 27. Take it as planning, and the date should be now 27 Jan. Measure version is your plan 27. 27 planning is fine. So plan 27 is 116 here. All right. And after that, we'll add one more. That is add calculation. Go to restricted budget underscore 27. Let's take this as budget INR. Date to 27. and your version as budget. Click on OK. So budget 27 is this one. So 121 here. So now what you can do is go to your measure, go to sort and add custom order. In this actual USD, actual INR is fine. Then 26 and 26 plan and plan. This is fine. Click on create. So now we can see the values here. Actuals, what we entered, and its converted value in INR is $90 here. Then after that, plan for 26 is 115, and this is 120. Right? This is for 26. Plan value for this one is what? 16, and budget is 121. So 121 is 26, 121 is 27. Now, instead of having a very big structure, now it made it very simple so that we can plan it properly. Right? Now, what you've done is for actuals for 25, we have taken the standard rate itself, right? Not the 100. So here, do we have actuals? Used actuals for 26 is not there. So actuals we have to take from 25 only, right? Actuals 26 is not required. So let me take 2026 into 2025 hyphen 01 hyphen 01. Save it. So you should not take 90, right? So converted weight, I should not take your generic one, but actually we are specifically given it as 100. So you should take that 100 here. Now refresh the data. We see that it should take the 100 here. Fine. So this is one requirement where we are specifically telling that, yes, I want this particular category, and this category should apply to this particular rates. But now they are not actually your profit and loss and say, for example, your so they are not your average rates. You're not using for profit and loss and your balance sheet. So balance sheet and profit loss will using your average rates and closing rates. Now, what we'll do is we'll include your profit and loss as well as balance sheet now. Let's go back to this particular account. And in the account, we'll try to include your balance sheet, not appearing. So go to the settings, go to all accounts. And in the balance sheet, when I just apply this one, we got this values here. So I'll make cash as 2, then this as 1. Okay. Then after that, loan as 1, capita is 1, and your retained earnings is 1. So balance sheet is 0 for this. Okay. We want some values to enter for plan 26 and budget 26 also, right? So we'll take only 26 values, not for 27 then, right? So let me create one more measure, add calculation, restricted measure. Now this should be your value. That is the value for date. Now I'll take this as 26 Jan. And the version should be planning. Click on OK. Those are restricted measure, and in which we have cash as let me give the same figures, huh? No problems in this. So this is cash 3, then 1, and in your loan, I'll make it as 1. Capita is 1 and retained earnings is 1. So that it's trying to calculate for your plan values for 2026. Okay. Now I'll try to save this, publish these values. Now the same one, I'll just convert this to version instead of, so instead of planning, I'll take it as budget. Now click on OK. But Jan 26, it should be budget, and that is your actual value. That is your local fee. Now let me go to cash 2, then inventory 1, then loan is 1, then capita is $1. Then when I go for retained is 1. So once it is done, so it is converted the values here. So for 1, it is 120, right? It is using what 120 here for your budget. So let me clear this off. I don't require these values. I'll try to publish the values. Now this restricted one, I'll try to delete it. Not required in this one. We can see that these values are not using your average rate. Actuals is fine. So you're able to find the actuals for your P&L for 2006 as well as 2007. Year-wise, it is able to detect for plan as well as budget and plan and budget. That also is fine for us. And when you come to the balance sheet here, it is applying the same rate to your balance sheet, but balance sheet, closing balance and average rates are different, right? So P&L and balance, we don't use this normal generic rates, all right? So for that, we have to use your rate type with average and closing. Okay. So for that, what we need to do is go back to your account model, right? Come to the model structure. Within the model structure, select your value, and the value here shows that your rate type. So currently we have given here category for a rate type, we have taken it as blank. But what we have used is we have used the category as actual, then plan and budget. But they are generic rate types according to actual, plan and budget, but not your average or closing type for your account. So they're not your account rate types. So in the measure, one drawback is you can select either average or closing. Now, what is the current selection here? So in the priority, we're given this as measure, right? Now, what we can do is, if we take this as a measure and set this to, for example, average and save it. As these are not the average rates, so if I try to save this input template and refresh the whole page, so it'll throw an error telling that your currency is not maintained at your average or closing rates. So first we're given there as average only, right? So let's go back to your currency conversion here. Then within this, we'll try to copy the actual budget and planning. This is your actual value. Control C. And this actuals, we'll try to specify this as average. Then after that, budget. Let's take the budget here. And this, we'll keep this as it's an average rate. And third is your planning. So for planning, I'll copy this one and make this as an average rate. Now, for this, from here, this I'll start from 150. And this says 151 and 152. Let's say we are trying to differentiate the exchange rates to this exchange rates. So USD to your INR for actuals at an average rate, for example, it is 150. Okay. And for the budget, we're trying to take this as 151. Our budget, we'll keep it as 152. And for average, this one, I'll take it as 1. In the same way, for your balance sheet, we have to take as a closing rate, right? So month end closing rate. So month end closing rate, we'll try to take this one as Control V. Now it should be closing, closing, and closing. Three things we need to maintain for that. Now this, I'll try to start with what, 160, 161, and 162. 1, 2, 3 is fine for this. Otherwise, what can we use a different one? 150, 160, 170. Budget is 180. And planning is 170. I'll give still more different values, right? This is all within the average rates are within 150, 151, 152, and these are 60, 70, and 80. Now, let's save this. Now we have maintained your average and category based. So here in the model, when you take a measure, this we are specifying that we are using this one as average rate here. Okay. Now save this. Now refresh and refresh this page. Now we can see that it is not giving an error. And when you see the cache here, it is using what is using here for cache. It is 150, 151, and 152 for your actual budget and this one. Now we'll try to do this according to this one here. Cool, guys? But it is not using your closing rate here. Balance sheet is not using the closing rate. It is still using the same uh, average rate for this. Now here also is 50, 51, and 52. So P&L also is using the same rate, and your balance sheet also is using the same rate. Fine. So measures, one disadvantage here is either you apply average or you apply closing rate. So if you apply closing rate, go back to this and try to refresh now. Now it is using what? Closing rate as 160, 70, and 180. So for balance sheet, this is correct. But your profit and loss also is using the same thing, 60, 70, and 80. So it should differentiate based on your account type. So that differentiation you will not be able to do at the measure level. So for that, you need to go to your account. This is very important here. So go back to your dimension, go to your account. And in the account, we have your rate types, right? Define. So the rate type for this is average and closing. Here it differentiate. For sales revenue, it should use average. And for cash, it should use closing on here. So the rate type in the account will differentiate between average and closer. So let's go back. And now let us set this structure priority to account dimension. Now click on OK. Save it. Go back to the report. Now refresh the data. So we'll have here perfectly that P&L will use 150, 151, and 152. Okay. And for balance sheet, it will use 160, 70, and 80. Right. So here we can see that this is your closing rate type. So balance sheet you use 160, 80, and 70, and this should use 50, 51, and 52. So that's going perfect here. Okay. And if you want to maintain this for the next year, for this one should be a little bit different, then maintain the values here. I'll copy the whole structure here, copy this and paste it, make this as 2026 to 2027. Actuals is not required actually, but take a 2027. Then let me copy this and drag and drop here. Now save it. Now for 2027, did it again going to a different manner. Okay, so the from date, I'll try to make it as ascending. For 2027 average, I'll take here as 10. So it should be more right. So I want to take a little smaller values, but let's take it as 190, then 191, 192. Budget is 192, and planning I'll take it as 191. And this one for closing rates, I will take it as 193, then 194. Budget is 195, and planning is 194. Okay, now save it. Go back to the report. So there is no actual values for that. The exchange rates are there, but still the values are not there. So if you want to still maintain that one also, then let me go back to this. Why to miss that one? So let me go to add measure, go to add calculation and restricted. We'll keep it restricted only. And this one should be to your value date for 2027. Jan, then add dimension, version should be selected to planning. First I'll enter the planning values, then after that we'll enter the budget values there. Okay, so for this cash, we'll make this as 3, then 1, then this one to 1, this one to 1, and this one to 1. So we populated the values for this, and next let me go to edit calculation, and let me take this now as budget. Okay, cash as 3, inventory as 1, loan as 1, this is 1, this is 1. Done. So after getting this, I'll try to delete this one and have only this fields. Now sitting as what is values here for this one, we have seen that it is 91 and 92. Plan is what for 27 is 91, 92. And here for this, it is 94 and 95 in this one. right? So as we have seen, the actuals for 2025. So this is 150 for average rate, right? It is not your USD, you're not a generic rate, nor this is a generic rate is 90. Then after that, if you see for actuals, this is your actual, which is 100, all right? So this is for 2025, 100. It's not taking either 90 nor 100. It is taking 150 here, actuals average. So actuals average will be applied for your profit and loss, right? Okay. Now coming to this 150, then plan for 26 is 51 and budget for 26 is 52 is the rate. And when we see for 20 budget for 27, 26 is 51 and budget for 27 is 192. So that is your plan for 27 is 191 and budget for 27 is 192 rupees. Plan and budget, that is the difference what you can happen. These are all your average rates for a particular plan, for a particular budget, and for a particular actuals, right? So other than this, we have another property that is within your currency conversion. We got something called a rate version. So these are the standard categories, what we have: actual, budget, planning, forecast, rolling forecast. But other than this, if you have any other categories, if you want to have any other version to be included, and for that you maintain a separate rate for that, then you can use your specific rate for that. Okay. So within our data, I want to create one more version called, for example, forecast. That is for forecast values for yearly forecast. I want to give for forecast 26 as a whole value. So in order to create yearly forecast, what I will do, I'll just go to version management. Within the version management, let me go to create one public version called forecast 27. Okay, forecast 27, and this will come under your forecast term and click on create. I'll copy this name for this. Now click on create. Then once done, so I'll try to click this. We have this forecast 27, which will be appearing. Then now click on this, click on the table, go to the versions. This is data. Just go to your builder. Within the builder, go to version. So newly created version is not available. So I'll make it as all versions. This is your forecast 27. Click on OK. Fine. So forecast 27 is being added within this list. Now I'll try to create a measure. That is, first we'll try to enter some value into this. That is, let me go to add calculation, restricted measure. And for this, I will go for my value. The date, we have selected this as 2027. Okay, so I'll select it as 2027. Or if you want to do this for January 2027 also is fine. 2027. Then I am putting this as Jan. Okay, click on OK. So we should see this as 27 Jan. Click on OK. And rename this one. forecast 27. So once you enter values, then go for add dimension. And within the dimension, we'll take it as version and go for select by member. And within this, I'll go to settings again and change it to all versions. Then select it as forecast 27. Then select it as forecast 27 and click on OK. And again, I'll just enter. Now, if you see that, these are the values what we have. So currently, I'm trying to enter the value as 1, sales revenue as 1, then sales expense as 1. Then I'll try to publish it. Let's publish the value. So once it is done, then let's maintain some values for that, right? So now what I have to do is I need to go to my model structure. So within this, I'll try to create one calculated field. And in the calculation field, I'll try to specify here as add currency measure and make this as forecast 27. Description, I'll make this one. And within this, let's make this category as specific. Okay, because we have created a separate category that is your forecast 27. So we don't have actual budget forecast right now. So we have a separate forecast one. So for this, we'll take this as a rate version. And the rate version, I'll try to specify this as forecast 27. Right? Now click on save it. Once I've saved, I'll change the settings too, because I'm using a measure here. Then let me put this to measure. Okay. And save it. Once done, now I'll remove this balance sheet for the time being. And these values, in order to convert to a different currency, then these are entered values, right? For this is for inputting the values. I've taken this particular field. Now then what I'll do is I'll go back to my currency conversion and I need to plan for this values, right? So then from USD to this one, let me take this as average, right? So from USD to INR for 2027 is what we require it. So I'll copy this. So USD to INR for 2027 Jan. And this rate, I'll just keep this, for example, 300. And this is for your forecast. No, we have to give this as a specific. And the specific one, sorry, control set. That is your, what is the value given? Forecast 27, all right? The specific rate, what we given is 27 here. The same thing we try to specify here. Other than the standard categories, when you're using a specific rate for a particular version, then we'll try to specify this as average. And we're giving 300 here, right? Now save it. Done. Now let's go back to your currency translation one. And this forecast 27, instead of the local value, then I'll try to convert this into INR. So let's go back to the last forecast 27, go to edit calculation. Now the measure will change it to your forecast 27 from here. So is it available? Forecast 27 is not displayed here. So then what we'll do is we'll try to save this, refresh the whole page. Once done, now let's go back to our builder and go to the measure and forecast 27, go to edit calculation. And within this, the measure, we need to change it to forecast 27. Done. Then the version for which we are trying to search is your forecast 27 only here. Fine. Just save it. Go to edit one. The version should be forecast 27. Sorry. So I need to make this as ANR. So while creating this forecast, we need to take this as value as a source measure, and target currency is INR. And we need to take this as category specific forecast 27. Now save this. Then after that, we need to go to your measure. We need to go to your measure. And this is your forecast 27. And see that your measure is pointing to the forecast 27 here. Then the version also should be pointing to your forecast 27. Okay. Now save it. Then try to refresh. Currency conversion failed. Missing rates for this is missing. Okay, let's go to add missing value. It is not showing any value there. Okay. So USD to this and 27 is fine. 300 specific. Average. I've taken this as an average. Let's take this as closing. One more also. We'll try to add this, and this is 350. And save it. Once it is done, I'll go back. Now we are able to see this closing right here. Now it's showing as closing. Why it is closing? So let me go to the model structure. In the model structure, in my value, here rate type is closing. Okay, so I need to make this as average. Save it. Go back, and when you try to refresh, so we maintain both the values, right? That is a example for your specific rate version. So the next topic is we'll be discussing about optimistic and pessimistic options, right? So in your business, whenever you're trying to sell a product or you're trying to do some exporting, say for example, you do some export of your product. After exporting, what is the revenue which you are going to get? For that, the exchange rate, what you expect is a little bit higher, right? So more positive the exchange rate, then better the revenues you get it, right? True. But when you're trying to import it, right? When you're importing means you're trying to purchase a product. So while purchasing the product, what do you always expect? That the exchange rate should be lower. Say for example, current the rate is 95, right? The exchange rate is 95. Now next year, or over the next month. Optimistic value is you expect something to raise while exporting it. So if you get something like 96, then the value of your revenue increases, right? If it is 100, still it is good for you. So optimistic values are you are expecting something like to raise this particular rate so that if it is going to 100, optimistic means making some positive assumptions that yes, if it goes to 100, what is the revenue I'm going to get it? All right. And pessimistic here is when you're trying to import it, you expect the values to be something like 94 or 93 something. So lesser the value, so then your importing cost will be less here. This is your pessimistic. This is your 100 is your optimistic value. Okay. Now comparison, it will be good for your comparison when normal actual is this. Then after that, pessimistic value is 100. Sorry, optimistic value is 100 and pessimistic value, you're expecting this to be 93. Fine. So difference between this and this is your 7 is your difference of your optimistic and pessimistic rate. So there is a variance. So let's see one example for that. So we'll try to copy this. I'll try to duplicate it. So this table, I don't want this many fields for that. So let us, so in this, I don't want the forecast. Then I don't want this. I'll just keep INR only here, right? Okay. So this is your actual converted value. That is your 150. Okay. So 150 is the rate, 2025. Now we need to maintain optimistic and pessimistic rate, right? So let's go to your model. Within the model, I'll try to create one calculation here. And the calculation is I want to display my optimistic rate for that. Let's go for add currency measure. And this, I will make this as actual underscore optimistic. Okay. So then after that, let's go for, this is your target rate. I want to expect this in INR. Then the category, I'll go for specific. And the rate, we're going to give this as optimistic. Okay, the rate, what you're going to expect is your optimistic rate. Then save this. And one more, you can create this as actuals underscore pessimistic. Then go to your source measure is this, fixed is your INR. Then we can go for specific and the rate version, I'll make this as pessimistic here and click on save. So if 150 is the actuals for 2025, then let me copy this and put this as USD INR 2025, and I'm trying to make this to 200 is the optimistic rate, right? And I'll make this as specific and type here as optimistic. Okay. Now copy this and make this to pessimistic. Now pessimistic rate is, I'm expecting something like 103. Okay, lower the value. So 150 is the actual one, but I'm just expecting something like lower the value here, right? Let's click on save. So we have optimistic rate and pessimistic rate there. Now let's go to your model. And so let's go to the currency conversion here. I want to display your optimistic and pessimistic rates here. So let's go for creating one. Let's create a measure. And this measure will show the value in INR, the actual value in INR. Or what we do is we'll try to create one calculation for this, right? Let's go to add measure, create a calculation. Go to restricted measure. So we'll try to show this as, let's save it. First we'll try to save this because we want that optimistic and pessimistic values to be displayed. Then we will try to refresh it. Okay. Or instead of going for this data one is comparison. So in this, within your columns, so I'll remove this actual saver thing. So if you don't do this, what we'll do is we'll go for the scratch. So first we'll go for showing your actual value and actual value in INR. Okay. Now for that, what it is asking for your version to go for this. Now go for version. And once version is displayed, we need to go to filter the version as actual. Only one version will try to take it up. So actual value, and this is in your average value for actuals for 2025. Okay. Now what we do is we try to add measure, and the measure is actuals optimistic and pessimistic. Then right click the measures, then go to sort option. Within this, I will take this as value, and before this, your optimistic value, then pessimistic value. Then go back, and now we can see here that for your sales revenue, if it is your actual, then your optimistic rate is 200 and your pessimistic rate is 300 here. Cool. So conversions is happening because there is no version field or something created for optimistic and pessimistic. This is a direct rates. What you're trying to positive rate is what, and what is a negative rate, what you're trying to use it within this one. Fine then. So we'll see other options a little later. So make, we'll close further. So we'll try to close this session as of today. Okay. See you then. Bye-bye.